Coming up on the SBS On the Money podcast, super returns turn negative. The Australian share market has a spectacular week, but AI continues to kill more jobs. All of that and more next. Hi everyone, welcome to the SBS On the Money podcast for this Friday, the 10th of April 2026, a day where the Australian share market fell 0.1%, but for the week surged 4.4%, its best weekly gain since October 2022. We'll have the details with Poole from Oreana Private Wealth in a few moments as we go into more detail of the top consumer finance and market news stories covered during On the Money on SBS World News. But first, some super funds have seen the gains made since September last year wiped out as market volatility persists. Researchers at SuperRatings say the median balanced option is estimated to have declined by 3.2% in March. Those funds with a greater exposure to equity markets were hit the hardest as events in Iran evolved and the hit to oil prices flowed through to the global economy. It means since the start of the financial year, the median balanced option is up just 0.8%. For more, I spoke with SuperRatings CEO Kirby Rappell.
So it doesn't surprise me that super balances are down. We've seen a huge amount of volatility in Australian and international share markets, given the events in Iran, which is playing through to people's super balances.
When you look through the funds that you track, which ones saw the worst moves?
So those funds that have probably got more shares are more harder hit at the moment. So those index funds have been doing pretty well, probably having a bit of a tougher month. Those with infrastructure and private equity probably smoothed out some of the returns over March.
Do you have any data or have you seen any stories about potentially the number of super fund members switching funds as a result of all this volatility?
So as super balances rise, now being over $120,000, people are more worried about their super and actually more likely to switch. But the maths hasn't really changed. It's very hard to time the market. No one's actually good at that. And it's even harder to know when to switch back. So seeing more people thinking about it, but the outcome is you're probably not going to win.
I guess what's interesting is that we've seen the Australian share market anyway fall around 9% from the record just as the war started to the lows. But since then, the market has jumped back up around 7%, right? So run us through what your message for Australians looking at their balances and they're concerned about their losses, because this jump up that we've seen in the share market, that's actually happened in April.
Look, the key messages are if you're under 50, it's a long time till you're retiring. So probably try and block out as much noise as you can. Volatility is well and truly back. So I think super balances are going to start jumping around much more. But I think everyone should take heart. If share markets were down 9%, super's down 3%, you can see that super's weathering the storm pretty well so far.
It's Kirby Rappell there, the CEO of SuperRatings. Let's go now to the Australian share market where the S&P ASX 200 fell 0.1% today on light volumes, but it wrapped up a spectacular week, up 4.4%. In fact, it was the best weekly performance since October 2022. Today, though, 9 sectors ended lower, IT the worst, tracking losses in the US overnight where software companies tanked. The miners were down, Fortescue off by 1.3%. It revealed plans to remove fossil fuels for parts of its Pilbara operations. Energy stocks also declined, but property and financial stocks rose. For more, I spoke with Oreana Private Wealth Chief Investment Officer Poole. Isaac, so after plunging 9% since being at a record at the start of the war, the ASX 200 is up 7% since those lows, but just in the space of a few weeks. So are investors too optimistic about an imminent end to the war and the longer term effects?
I think what this is showing is just how difficult investors are finding it to look through the news flow and focus on fundamentals, because a lot of this big rally recently has been driven by relief and sentiment that maybe the war's over, more so than the fundamentals. The best way to see this is if you take a look at earnings expectations. Earnings expectations in Australia are around 18% for this coming 12 months, compared to about 0 for the last 12 months. It just hasn't been revised lower. And I think that's where the biggest shock could come for investors in the next 6 months.
How do you see it flowing through to inflation and global interest rates?
I think we are going to see inflation remain elevated and sticky, but I would be really cautious about drawing a straight line from that to higher interest rates. Markets in Australia and the US have already priced a lot of rate hikes in. I think that the RBA and the Fed will be far more cautious than that. And so we may actually have seen the peak in interest rates, particularly government bond yields, already. And there's a risk that we see them move lower over the next 12 months.
Given all the volatility, have you had to change the way you invest?
We haven't had to make big changes, but we have seen price moves recently that perhaps make equities look a little less unattractive. That said, my big caution is still around earnings expectations. Risk that they are re-rated meaningfully lower. That doesn't mean a big fall in equity prices. I just think that we have to be cautious, expecting a big rally from here. So we remain cautious and cautiously positioned.
Let's focus on AI for a bit if we can. And for a bit of background for our audience, software stocks in the US were hit hard again overnight on concerns AI will limit their usage appeal. Yesterday, we heard from the likes of Bendigo and Adelaide Bank announcing new tech deals, which will speed up AI usage and will cut jobs as a result. Today, in a LinkedIn post, the CEO of Life360 also said jobs will go as it adopts AI. What's your take on the economic implications of AI and what does it mean for investors?
I think that there needs to be a line drawn between the long-term effects and the near-term effects, because what we're seeing right now are very near-term effects of job losses, but I think that's tangled up with a cyclical slowdown in the economy as well. I think AI is driving some of this, but perhaps it's an opportune moment to cut costs as well. In the long run, it's going to be a big positive. I do expect AI will push up productivity. I do think that will lift growth potential and actual economic growth. And while there may be some job losses along the way and reallocation of jobs across the economy, I do expect we'll see better outcomes, higher incomes, better growth over that medium to long term.
And so wrapping up, what are you telling your clients right now and where do you see the opportunities for investors?
I think now is a really good time, if it hasn't been done already, to review diversification in portfolios. What we've seen is what worked over the last 12 months hasn't worked this quarter. And so that opportunity to perhaps tilt away from the US, reassess your FX exposures, think very, very carefully about the type of fixed income you have in your portfolio, but use the chance to be deliberate in diversification and build some resilience in portfolios. For us, that is the number one action you can take right now to really try and manage some of the risks.
It's Isaac Poole there, the Chief Investment Officer of Oreana Private Wealth, and he wraps up the podcast for this Friday and for the week. Give it a like, review and subscribe if you do enjoy it. And don't forget you can watch On the Money during the 6:30 weekday edition of SBS World News on SBS. The podcast returns on Monday. It drops after the market close every weekday. I'll catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.